In today's video, we're going to focus on some of the next steps that Bitcoin could take now that it's broken its macro downtrend and is getting very close to the halving event. We're going to be comparing previous periods in that respect. So let's dive right into the video. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's go ahead. This is the halving event, and when it comes to getting closer to this halving event, if we compare to 2015 and the 2016 period, it's very similar, right? When we compare it to 2019 and 2020, very different result. So this cycle is very similar to the 2016-2015 period. One of the things that contributes to that similarity is this reaccumulation range that formed a few months before the halving event. You can see that a reaccumulation range formed here as well before we broke out from it. So if we were to just say that this reaccumulation range breaks out and then we pull back around the halving event, it makes sense that a reaccumulation range that already occurred and now getting closer to the halving, we could pull back around the halving event. Of course, here, this occurred around a month before the halving, so we still have a bit of time to still hang about at these highs and potentially pull back. But let's talk about where is this 2016 rejection occurring. It's occurring at the same level of resistance below this macro diagonal downtrend resistance and old support right over here. So if we were to just juxtapose that in this cycle, you can see that this is also approximately a resistance area. If we were to raise that a little bit higher here, because we did reject that 46K, and you can see how this is a rejection from the macro diagonal resistance. So just like in the previous example right over here, we rejected inside this macro triangle and rejected from the macro diagonal. And same thing here, you can see that we are rejecting from the macro diagonal as well right over here. And at the same point, this is an old support. So you can see how this was an old support here. We lapse, break out, reject from here, and then we rally back here. And the point that I'm making is that this rejection from this resistance caused price to enter a steep downtrend all the way to the bear market bottom, but once we recovered, we reject from here and only experience a shallow retrace. So here, that resistance is very strong, but then this resistance gets very weak and only causes a small rejection around the halving before we break beyond here, even pull back in this candle to retest this as a support and then rally to new all-time highs. And the point I'm making is that what's very likely to occur is that, yes, this was an old support. We break down from here, rally, reject initially, but rally to make a new higher high, lose this support once again, reject as a resistance, and this resistance makes us go all the way to the bear market bottom. Does this sound very similar? Because it's all what happened right over here. We're just saying copy paste. So we're back here, rejection, and it could occur that a rejection takes place around the halving event. But just like we saw back here, we might reject around the halving, but then we're going to see a shallower retrace compared to this retrace. Just notice how this retrace was that deep and this retrace was only that shallow. So same thing likely to occur here. This retrace from this resistance, very deep, but this over here, we're going to probably see a much shallower retrace, and that retrace is going to offer one of the last bargain buying opportunities for Bitcoin before breaking beyond this resistance, because this is going to be a comparably much shallower retrace than what we saw back here into the bear market bottom. We'll see a shallow retrace, maybe 20%. We're already seeing 18, 15%, but maybe we see 20, 25. If we're lucky, we get 30%. But generally, around the pre-halving retrace, last opportunity, and then we flick back up, break beyond here, and possibly turn this level of 46K into a new support before rallying to revisit the old all-time highs and breaking beyond them. Because this is what happened over here. We broke beyond here, pulled back, not a picture perfect retest by any means, unless you would want to bring this back to the wick here where we really rejected from, and this is the picture perfect retest. But the point I'm making is that this is generally an intent to retest this level, but we never actually get that. So this rejection is occurring, pull back, and then we'll recover, possibly retest it, and then rally higher. But what about this resistance here? Because we're still rejecting from a similar resistance right over here. This resistance rejected price into the bear market bottom. We then got back in here, which was once again a very strong retrace. And it wasn't getting much weaker, but it did get weaker by comparison because we formed a higher low here. So the point is that we're rejecting and performing shallower retraces, even though this was a retrace that was very deep. And of course, the pandemic fueled this quite considerably. But the point is that this retrace is going to be much shallower than this one. And it was shallower by a thin margin. And the pandemic, once again, it's crucial to emphasize, really impacted this, but generally a higher low. And then we reject from here initially, but then turn it into a new support right over here before rallying to new highs. And that's the point that I'm making, that these resistances are weakening over time. So many people are getting a bit scared that we might see that pre-halving retrace, and we tend to see a lot of downside going into the halving event. Once again, this pandemic fueled downside, many people want to ignore it, and we just tend to see downside around the halving. It's whether it's a pandemic or not, but that's one of the last bargain buying opportunities. And what happens after the halving is we do get some dips, but we don't get strong retracements. They're very shallow dips, very quick. Everything tends to resolve itself within the period of a few weeks. So right over here, for instance, we dip, and within 1 month, because these are monthly candles, within 1 month, we already resume the uptrend here. A month of dipping before resuming the uptrend, a month of dipping before we resume the uptrend. Once again, a dip here, and then we resume, dip here, and then rally to new all-time highs and beyond. So if we focus on this period, for instance, we dip here for 1 month, resume, dip for 1 month, and then resume once again. So not many dips await in the post-halving period, but once we do see one of those dips, that's going to be a fantastic double down moment to just add to your position for a Bitcoin parabolic rally. But just before the halving event, that's where we tend to get a pre-halving retrace and one of the last bargain buying opportunities. So in 2016, we got this around the halving event. In the 2020 period, we got that just before the halving event. Around the halving event, we got some consolidation and dipping, but that's part of the reason we got this dipping here is because we got a strong crash before. So the market was really exhausted in terms of sell side pressure. If we were to get a pullback going into the halving, this is generally that time, that crucial time that we could see that pullback into the halving event, and then afterwards some consolidation at highs before we finally rally and break out to new highs we haven't seen in many years. So having said that, subscribe to the channel. Thank you so much for watching. Like this video if you enjoyed this one. Check out the top right hand corner video, and I'll speak to you in that one. Speak to you soon.